Hey everyone, welcome to another video. So in this video, we'll try and understand whether it is possible to transfer GST credits from one state to another state. Let's say from one business in one state of yours to another of your business in another state. So in this video, we'll try and understand whether it is possible to transfer credits in this manner, and if it is possible, then what could be the procedures involved in this particular transfer. So first things first, and that is whether it is possible to transfer GST credits from your business in one state to, let's say, a branch of yours in the other state, or your entire complete different business in the other state. Well, the short answer is it is not possible. Normally, it is not possible. So when actually it is possible, number one, when there's a change in the constitution of the business, probably the only reason when you can have a transfer of GST credits from one state to another state. Change in the business constitution. Now, you could have a business, and that business could undergo a change in the constitution when it's getting transferred to another business, be it by way of sale, merger, demerger, amalgamation, lease, or even transfer. So if these modes are being applied and you are transferring a business from your existing establishment to another establishment, it could be a completely different establishment or your own establishment, then in that case, there is a possibility to transfer GST credits from one state to another state. And let's see how. So say you have a company in one state which has a GST registration, and you want to transfer the GST and you want to transfer the business to another state another business in another state having a GST registration. Now, in this particular transaction, let's say this transfer happens by virtue of sale, merger, demerger, amalgamation, lease, or transfer. Then you could very well transfer the unutilized GST credits if all the liabilities of the existing business is transferred to the new business. So there is a particular section in the GST law which says that yes, it is possible to transfer GST credits from one state to another state, provided both the businesses have a GST registration and the transferor or the business which transfers the business is transferring all the liabilities, and then it can transfer the unutilized GST credits to the other business. So it is possible. What are the procedures involved in this kind of a transfer? Number one, the transferor or the business transferring, selling, leasing out, merging, demerging, amalgamating will have to furnish the details of the input tax credit on the GST portal in the form of GST ITC-02. It will furnish the details of whatever is the unutilized GST credits lying with them, and it will file the particular form, and the receiver or the transferee will get the details. So, number one, file ITC-02, furnish all the required details. Number two, ensure that the transferee or the receiver or the receiving business or the business to which it's being transferred to is formally accepting the details by going on the GST portal. So ensure that the transferee accepts the details. Number three is getting a certificate from the CMA, irrespective of the quantum or the amount of input tax credit that is unutilized. You need to obtain a CMA certificate which sort of signals the authenticity or the genuinity of this particular ITC transfer or the input tax credit transfer. So get a certificate vetted by a CMA which substantiate the genuineness of this particular unutilized ITC transfer. And finally, ensure that all liabilities are being transferred. There should not be a situation where you transfer unutilized GST credits to another business and then you don't transfer any liabilities. Well, the underlying point here is that transfer first all the liabilities on a priority basis. Everything should be transferred in terms of liabilities. The assets could wait, and then transfer the unutilized GST credits to the other business. So if 1, 2, 3, 4, all four conditions are satisfied as per rule number 41 of the CGST Rules 2017, then yes, you could very well transfer unutilized GST credits from one state or from one business in one state to another business in another state, both having a GST registration. Well, specifically in this video, let's talk about the case of demergers, because sale, transfer, amalgamation, lease, merger is pretty straightforward. But demergers, how do you really apportion the input tax credit, is a question to be answered. What is demerger? Your company ABC is being demerged into several units, let's say ABC. Now, when a demerger happens, it is important to understand that all the procedures, all the rules will apply. Number one, you need to file ITC-02 furnishing the details, number one. Number two, you need a CA-CMA certificate certifying that the ITC is remaining unutilized. It is bona fide, genuine ITC and is being transferred. Number three, you need to transfer all the liabilities. That's from ABC company. All liabilities should go to ABC in the proportion that they decide. And number four, the ABC, the individual demerged entity, should accept the details in IT-02 on the GST portal. But the fundamental question here remains that how do you transfer this unutilized ITC? The unutilized ITC lying on the GST portal of ABC, how do you transfer individually to A, B and C is the question. So Rule 41 again talks about the particular demerger situation where it says that the unutilized GST credits which are remaining unutilized should be apportioned in the ratio of the value of all the assets. So if the value of the entire assets in this particular enterprise, let's say 10 crores for example in ABC company, and let's say 6 crore is the asset value in A, 3 crore asset value in B, and how much is it? 1 crore is the asset value in C. Then in 6:3:1 ratio, you need to distribute proportion the ITC and then furnish the details in IT-02 accordingly. So the only cause of concern here is how to apportion unutilized ITC in the ratio. It should be apportioned the ratio of all the assets of the company split into the different companies. So take all the assets on which you take or don't take GST credits. Take all the assets and calculate what is the value of assets then into the separate entities. See the proportion which is 6:3:1 and then apportion whatever is the unutilized ITC remaining with ABC company. So therefore, you have a section and rule talking about the possibility of a transfer of GST unutilized credits by a company or by a business having a GST registration in one state to another business having a GST registration in another state by adhering to the provisions of Section 18 subsection 3 of the CGST Act 2017 and also following the procedures of Rule 41. There's no other way in which you can transfer GST unutilized credits from one state to another state, only by way of sale, merger, demerger, amalgamation, lease, transfer. And we also stressed upon the process of demerger wherein the ITC should be apportioned, the input tax should be apportioned in the ratio of value of total assets. So with the adherence to the provision section 18.3 and Rule 41, the GST credits unutilized can be transferred from one business in one state to another business in another state. Well, I hope I was able to make things clear through this particular small video. If you liked the video, you could show support to us by hitting the like button. If you want more videos these on regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.